Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the market. Solid green day for the bulls, nice strong close, and the bounce is not done yet. So we did form a daily inside bar today, but it favored the bulls. We had a nice clear 15-minute tightening range all morning that broke with a nice signal where we had the high of the day, low of the day, double top, and it was really a triple top with the high of pre-market. Higher low, lower high, higher low, bull break, sideways continuation, very strong end of the day. So it was nice to see that nice tight pattern give an entry signal, and now all eyes are on the high of yesterday. As I said in a recent video, I don't care much about why things happen, but I do believe that this has to do with Biden. Some of you believe it doesn't have to do with Biden, but I personally believe it does. The biggest reason for me is, number one, weak close yesterday, 2% higher open today. But number two, and more importantly, how many times have you seen a rally led by the healthcare and the biotech sector, who have both broken their high of yesterday, while the tech sector and the financial sector both have not broken their high of yesterday? The answer for me, watching markets on a daily basis, that does not happen at all often. So for me, that tells me, well, that makes sense logically speaking. If the market is no longer concerned about Bernie getting the nomination, then that sector would see some money flowing back into it. So that's my opinion. But again, in the end, it doesn't matter. We'll never have a real answer. Was that the reason or not? All that matters is the high of yesterday resistance of 313.84, and for QQQ and XLF, can they break their highs as well and follow along? If we do, fear subsides, another drop of fear, and we then have even more space to work with for a daily higher low to form once we top out. Hourly time frame for SPY, plenty of space for a higher low to form. We're pulling back a little bit in extended hours, but we are very extended. Anything above the low of today is an hourly higher low. So even if we did see a lower open tomorrow, fail to break 313.84, we will just be looking for an hourly higher low, at least initially. So bulls are very comfortable with where we stand right now, and it's just a question of, can the tech and financial sector follow along? IWM, daily inside bar, have to see a break of 154.20 to try and create more space and to try and see this bounce continue. For QQQ, that resistance is 219.61. And for XLF, that resistance is up at 28.25. If we break our resistance levels, we're looking back at the high of the previous days on the way down. So if we see XLF break 28.25, we've got 28.39 as a resistance level to be watching after that. Risk to reward of bullish entries at this point, other than day trading, is not favorable in my opinion. If I'm looking bullish and I want to swing position and I miss the dump and the first day or two of the bounce, I am now going to be looking and patiently waiting for a daily higher low to form. And I will be looking to scale in for that daily higher low. And then we have a clear stop level. At that point, the lows of the dump are our must-hold levels. So if, let's just say, I have a long-term IRA portfolio, and let's just say we get a bit more follow-through, we top out at 317, and then we lose the hourly uptrend and start pulling back for a daily higher low. I can start scaling in at 305, let's say 305, 300, 295, 290. Those are my 4 scale-in positions. Ideal scenario, not all of them fill, and we change the daily trend, and then I have some nice solid winning trades. Worst case scenario, they all fill, and I stop out on a bear break of 285. That being said, I then have all cash again, and I can look to reload cheaper because clearly fear is spiking again, and the fact that we did end up dropping and breaking the low of the dump is again making it unlike any of the other dump scenarios that we've seen over the past couple of years. So I would prefer to be all cash, knowing that I could have another opportunity to reload cheaper at some point in the future. So that's just a rough game plan if you're looking at a swing trading perspective and want bullish positions and aren't in them yet. We are still absolutely looking for a daily lower high to form. The question is, where? And I don't have that answer. We take it one day at a time and we watch the hourly uptrend to see how long the bulls can keep that intact. One reminder, volume. Volume does not matter for the bulls, and it matters for the bears. Bulls can go up significantly and consistently on very low volume. I learned my lesson on the reaction to the Trump election in 2017, where I was hesitant because of the lack of volume, and eventually it reached a point where I said, okay, S&P 500 bulls do not need volume to go up. But if you look at any dump, it is associated with high bear volume. You cannot dump in this market without high bear volume. So we have our key resistances we're going to be watching tomorrow. The low of today will be the most important support on all individual names. If we fail to break the high of yesterday, XLV, next resistance level is 175. Most important level is 104.84 and 105.08. Tons of space for a daily higher low to form once we top out. Biotech sector, next resistance 94.69, then a gap fill to 96.56. Tons of space for a higher low to form once we top out. Semiconductors, right at the high of yesterday, have not broken yet. Key resistance is 140.94. If we break it, we're in gap fill territory up to 144.96. So again, it doesn't change our broader perspective where we are anticipating lower highs to be the result of this bounce. All it does is, again, probability needle. Is our bottom of the dump found? And if we continue to bounce and create more space, the probability needle shifts to, yes, increased odds that our low of the dump has been set and that bulls will be able to at least give us daily higher lows when we do top out. The VIX, daily inside bar. So I'm looking at an hourly downtrend now. Lower high, lower low. Anything under 35.60 is a lower high. We're looking down at 30.30 and 24.90 as two key levels, and we'll see how the inside bar breaks tomorrow. If it breaks bullish, daily higher low is clearly set at 24.90, and if it breaks bearish, we're looking back at 24.90 as our key low. Gold holding on, but a little bit of weakness on the end of the day into that bull move by the markets with a strong close. So the 4-hour time frame has some higher lows to be watching, and if we break 16.32, we will then say daily lower high is very likely set compared to 16.60, and we will then look for a daily higher low. So again, same thing. If I'm not in a gold bull position at this point and I want one, I'm patiently waiting to scale in. Maybe I make an initial entry at 1620, another at 1600, another at 1580, and then a stop under 1563. Same exact scenario as what I just laid out on SPY. Clear stop level to go off of. I will be out of my long-term GLD position if this low of 1563 breaks. Silver, still not gaining much on gold at all, and a daily inside bar. If that breaks bearish, our daily lower high is set, and we then look back to the low of 1639 support. If we break bullish, we have not set the daily lower high yet. Bull miners, decent close there, hourly tightening range. Let's turn on extended hours, a bit more clear with it on. Low of yesterday, high of yesterday, higher low. Lower high was pre-market, higher low was low of today. 31.96 is the most important resistance for me. We ended up holding support by 51 cents. If we reject from 31.96 tomorrow, we look for an hourly higher low compared to 28.79. If we lose the hourly uptrend and break this tightening range bearish, our daily lower high is set. It's doing the same thing as SPY and all these other names. Oil, tightening up as well. A little bit weaker. It's a daily inside bar as well, but if it breaks bearish and 46.67 breaks tomorrow, our daily lower high is set at 48.64, and the bulls then must hold 43.88. A weaker bounce on oil than we're seeing in equities. And natural gas up at the high of the bounce has not topped out yet. Next resistance level is 1894, and as long as the 4-hour uptrend remains intact, the top of the bounce has not been set yet. Last 4-hour high or low was 179. So that's where we stand overall. A big win for the bulls. That second half of the day definitely kicked it into gear. And very curious to see where we open tomorrow, because if we get a lower open, we could see these ranges continue to tighten a bit. Look at the 4-hour time frame. So if we fail 313.84, and if the tech sector and biotech sector cannot break their resistances, then we could potentially see, that is not the tool I wanted, we could potentially see a tightening 4-hour range from there. So all about those key resistance tests tomorrow. We'll see where we open in pre-market trading. Hope you have a good rest of your day. Do good things.